You're watching Famous Dave on YouTube.
Hi, welcome. My name is David Lincoln, and I am an options trader. I generally have positions on that last anywhere from a couple minutes to a few weeks, and I generally talk about the VIX. And so let's talk a little bit about what happened this week and the VIX. I did release an earlier video today, but I'm probably going to take that down because I felt like the tone was like too much focusing on my own positions, which really doesn't matter to anybody except me. So we're going to try a little redo here. And we're coming out off of a very volatile week. And let's go back and just kind of take a look at what happened a little bit. We had a huge down move a couple sessions ago yesterday, and then we rallied back a little bit today, but still we're in a volatile spot. Let's take a look at the charts. Let's go to the charts here, and then we're going to go to VIX Central. All right, so here is the chart of the E-minis representing the S&P 500. We can go exactly to the S&P 500 if that makes you feel better. Same thing. And you can see the big down move that happened yesterday. And this was a big move. And I just want to talk for a second about VVIX, which was in the description for this video. Now, if you follow me closely, you'll know that I don't take as much I don't apply as much importance to VVIX as some people do. And for example, if you listen to like Theo Trade, they'll talk about how like, well, a certain number on the VVIX means danger. I think they say like 120 or something. I don't see it that way, but the way I do see it is just the trend of VVIX moving around means something. And let's take a look today at what happened in the VVIX. Now, VVIX, the VVIX was up today. Now, the VIX was down a little bit today, but VVIX way up, right? So here's VVIX here. Now, what is VVIX, you may ask, my friends? Well, VVIX, when we talk about options trading, we like to evaluate the different price level of options, and the way we compare options across different stocks is through a volatility number. So if we were to look at so if I were to pull up Apple, for example, and pull up the options, there would be a certain volatility number, right? So if I pull up Apple and then I go to the options screen for Apple, this number here is the volatility for each month. It has 41, 42 here. Then if I go to another stock, we can kind of compare these because look, we can say, oh, well, Tesla has a volatility 126 days out of 91, whereas Apple is a little less volatile, has a volatility 90 days out of 40. So it's moves around half as much as Tesla, right? Well, VVIX is just this number, but for options on the VIX. So if we were to pull up options on the VIX, remember these are generally hedged with VIX futures, and we look at the numbers. Oh, look, 30 days out. Oh, the number's around 18 days out, it's 173. Well, the average price level for these options on the VIX is the only thing that the VVIX number is. It's a kind of a fancy way of just showing the volatility of VIX options. And so when VVIX goes up, what we want to do is we want to dig into, and here's VVIX, got up to 170 today. It's down a little bit. Remember, the VIX was down a little bit today too. Let's look at that. VIX was down a little bit today. But when we go, VVIX was up on the day. And when we see VVIX up, what we want to do, and you've seen me done this before, is we want to dig in and see what options traded. Because if it was put buyers, if people were buying puts in the VIX, then that's really not signaling that the VIX is going to go higher, right? That's signaling that people are betting the VIX is going to go lower. However, if it's call buyers, then that means that people are hedging their portfolios by buying options in the VIX. And so let's dig in and see what it was today. So I'm going to go to under time and sales. And then we can go the largest size trades. And look, the biggest trade of the day, 46,000. Now it's green. That means they paid, the customer came in and paid the offer on calls. So if someone bought 46,000 calls, paid the offer. So that is a bullish volatility trade. That means somebody is betting volatility, is they're buying calls in the VIX. So they're concerned about volatility, the upside. They're hedging some kind of portfolio with this probably. So this is about a month and change out. So they're worried. Okay, and then we see this to the downside. Somebody, it's a mid-market trade on the puts. So we can't tell there what that really means, but definitely someone paying the offer, we know that means that they are definitely concerned and they're buying that. Now, if we look at some other trades here, here's another call trade, mid-market sort of, but here's a put trade. This is June 17 puts. Looks like they paid the offer on these, but these are way out of the money puts. Look, so this is probably, I would speculate that this could definitely be somebody covering a short, because look, the market was no bid at 15 cents and they paid 15 cents. The 17 puts, they don't seem in play at all right now, right? Because volatility right now up around 36. So the 17 puts not in play right now. But anyways, so there you have it. And the other way we can look at what's going on here is we can look at today's option statistics, right? So here's the option statistics. Okay, so we had calls volume 800,000, right? Way more than the put volume. So this means this should be a big red flag to you out there, that this whole thing is not over yet. Now, if you said to me a week ago, Dave, the UVXY is going to be up around 38 next week. That would have been great if I knew that, because I could have bought it and made money. But my point being, volatility is elevated. Generally, what we like to do as short vol traders is when we get a spike like this, we like to jump on and ride something back down. But I've been very hesitant to do that, because this warning sign that people are buying more on today after the big move. Yesterday was a big move, right? Today, after the big move, trading firms are not selling the volatility. They're buying more, right? That's what this means with the VVIX. They're buying more volatility. So it doesn't seem to me like there's any huge rush to be selling this stuff. Now, I made some intraday moves today, like got short for a little bit, took it off, this kind of thing. But as far as, yes, I don't think it's a bad trade if you go long term, when we get a pop like this, to put something on and just set it and forget it, because we know that stuff's going to come down eventually, right? But in the meantime, if you're someone like me, I have a really hard time like committing my capital to just putting a trade on like now, taking all my capital and shorting some far out option in some VIX product, and that's my whole trade for the next 6 months or something like that. I know that that's not how I operate, that I'm going to want to mess around with my capital more than just leave it in some big trade. But it's not a bad idea to put a short on. And if I were going to put a short on, I would look at something like, if we go out here in VXX, I would look at something like past the election, right? So December, now VXX 38 and change. I would look to something like the December 28, 24 put spread, something like that, out of the money spread. And there's a real good chance that volatility is going to come in from between now and then, and that we'll be back in contango and you'll make money on a short trade. But the warning signs are there that this situation that we're currently in is not over, right? Not only just because the market didn't, it rallied today, but it didn't feel like it didn't feel like that strong of a rally. And if we actually look at the chart here, we see the let me close up on just today. Sorry, we see the sell-off and then the rally. It rallied back a little bit, but we didn't end on the high of the day, and it just didn't feel real solid today. Plus, we have things like this I was looking on my screen at the side of my eye all day today and seeing this VVIX. And like I said, I generally, don't pay attention to VVIX. I don't think it's that great of an indicator in most circumstances. But I was sitting there out of the corner of my eye looking at it up like 10 points today, and it was making me not want to sell stuff. If this was a quote-unquote sort of normal economy and we're just rallying and there's not all this negative news, then this would be a perfect spike. We have a spike in the VIX, and then you sell into it, and then you buy it back when we're done with the spike. If we were just like in a normal rally, this would be a perfect time to lay into volatility. But I'm scared. And if you follow me on Twitter, you've seen I've been very vocal at being like, this rally's overdone, this rally's overdone, this rally's overdone. And I don't think the sell-off is over. I don't think that the Wall Street or the government or anybody is really taking seriously this continued COVID situation. Everywhere I listen, people are like, kind of like downplaying it. Like if you listen to Joe Rogan, he's like, oh, it's not that big of a deal. Everybody says it's not that big of a deal. But then we knew that there was a possibility that with this reopening stuff that we were going to see stuff spiking, and indeed we have seen stuff spike a lot. Also, there's political stuff going on. There's always political stuff going on, but we've got the election coming up. We've got this, John Bolton book coming out, and we have this this whole protest and stuff going on outside. Meanwhile, we're still not reopened from COVID, and it seems like people are acting like it's over with, and of course we'd like it to be over with, but there's a whole bunch of stuff conspiring right now, and one big down day, we are still very elevated. I mean, look at Tesla. Tesla's still over $900, and meanwhile, we've had stuff that has negative impact to our economy, and it really doesn't feel reflected in the whole situation here, even with the sell-off yesterday. So that's weighing on the back of my mind the whole time, and maybe it shouldn't. I know people, when I didn't participate in the most recent rally, people were said, well, you missed out. Could have made money. Everything went up. Could have made money. But that's where we are. VVIX is an important indicator, and when it's up so much on a day when the market is up, right? The market's up, the VIX is down, and VVIX is shooting through the roof. So warning, Will Rogers, warning out there, something's going on.